get it uploaded. Okay, here we go. SMF Street Traders. We got Panera Bread gapping down 4:52 in the morning, and this is the gap open down list. You got the TQQQ. That's the bull in here gapping down. So that left elbow on that bull can flag. When that one gaps down, can flag. That says TQQQ down $1.17. Once that puts in that bottom, it'll bounce. Can flag. Another thing you're going to be looking at is that PFCB. So basically, I got Panera Bread, Buffalo Wild Wings, and I think that one there is a PF Chang's, which it is, yeah. So that what we have right here is we got some restaurant stocks that were reporting their earnings last night, and they're not doing so well. So that's contributing to that gap down pre-market, and this is on the NASDAQ. One of the other things we'll be looking at in here is on this Google trade, which its gap down is very minimal, but it's still on the list. So it's a diminishing gap down. We're going to take a look and see if we can break above that 621.75 handle this morning. If they torpedo that up there, the TQQQ from Mr. Ken Flag, we closed at 129.22, and that's the bull. That's the bull. And the bull on that TQQ for Ken Flag on that left elbow gap down. He's going to move in and get that sidewinder right off that low once it's made on the bull in pre-market. So really, MMTs, you got some earnings related stocks that are gapping down, and most of them the bigger gap down today is just so happens to be these restaurant stocks. MICC, that's a sell your thing at 95. Most of these names are overbought. And during the weekend training session, we're going to develop, the MMTs are going to develop so that when the market is ready to pull back, that they've got the most overbought that they can put options on and make money with. So this is the pre-market. Let's take a look at the gap open up. On the other hand, there is some new look at the gap open up. So here, let's put it, let me get this figured out for you. So that you can see the symbol. On the other side, on that opening gap, FFIV, Broadcom came in. They did well in that semiconductor. You got Equifax, JD, AS Software came in, Dreamweaver came in. We know all of these. So this is the gap up list. This is that right elbow. And senior traders, what you're going to be looking to do is how to take them down when they fell on that opening bell. Apple is on the gap up now at 70 pennies. So this is the gap up versus the gap down list. We can see that within this is that we got a lot of tech stocks. You got Marvel. You've got NTAP in the storage sector. Then you have the software sector. Then you have the technology sector, SanDisk, RIM the last couple of days. Here is the other side of that bull is the bear is gapping up. So when it gaps up and puts its high in, the people, the MMTs, can sell short the bear off of that right elbow gap. And at the very same time that they're doing that, they will get net long this TQQ off the bottom. That closed at 129.22. So the bear is gapping up. You'll short the top of the bear and you'll buy the bottom of that bull. Price line has got a gap again. And you talk about an overbought stock. It's probably one of the most overbought stocks. And it reminds me of like year 2000. Pump them and dump them. And we're going to be looking where that pump and dump is. So that's the gap up list on the, and once again, Ken Flag. You got that bear gapping up, Ken Flag. So if the bear is gapping up, then that means that other pieces of the market, even outside of these gaps, you got that bear is still gapping up. So Ken Flag, short that bear and go long that bull.